Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Plenty for us to talk about this week as we start to really wind down 2017, and we're going to preview some of the last reports of the year that we'll talk about next Friday. But to start things off this week, let's go ahead and get started and take a look at that market recap.
Started on the cattle side this week. So fed cattle been slow to move this week. I'd actually say, we're pretty much flat on fed cattle prices, cash fed cattle prices for the week. If you look at live cattle futures, however, I'd say we were up for the week about $3 as a result of some very nice strength here in the latter couple days of this week. Also, feeder cattle current futures contract up about $2.50 as well. On the feeder cattle side of the cash feeder cattle side, I would actually call them lower again this week, 2 to 8 lower, maybe a little bit of strength in some of the very lightweight calves out there. So might have got a lot of strength on the bottom side of that. When you look at the choice beef cutout for this week, down $3.60 relative to a week ago, I would say much of that had to do with lower rib prices that we saw this week. So some lower beef values that showed up on the hog side. Cash hog prices, I'd say down about $1 for the week relative to last week. Lean hog futures look pretty flat for the current contract that are out there. Yet when you look at the pork cutout values, so we saw a lot of action this week in that wholesale pork market with the pork cutout down $4.50 relative to a year ago. Hams, but more importantly, bellies that were down 25 cents relative to a week ago led a lot of that decline in that pork cutout value. I'll just remind folks, when you look at the meat side of this for a second, we're in a situation where these meat prices are coming closer ago at this time, where a few weeks ago we would talked about both pork and beef wholesale values that were 10 to 15% above year ago levels. We're now more just only about 5% higher. So it has been a change. And I worry about whether that feeds through at some point into cattle and hog prices in particular.
I have to say, it sure took a long time for cash cattle to trade today. And when it did, finally, it looks like a little bit of a moderate trade did develop, but it waited until I don't think it could trade any later in the day.
I certainly think you have both sides of that market trying to figure out what to do in terms of bids, and maybe watching futures as we unfolded in Friday was helpful to finally getting some cash markets to move.
When we look at the wholesale side of things, I'm going to switch to pork for just a second. We talk about that drop in bellies this week, and it really kind of it dropped like a rock from the top. Do we think maybe we're starting to test that bottom? We saw them bounce back a little bit to close today. Or is it still a little bit of wait and see as we round out the year?
Well, so I do think we have some wait and see. Bacon and bellies in particular have just been so important to pork markets as we kind of recap 2017. And although here in a little bit we'll talk about where retail bacon prices have gone, it seems to me that we've not been able to find any happy medium ground when we talk about belly prices. We were record high back here several weeks ago, crashed pretty hard, and then have seen a nice recovery until now what's been another turn down. So it seems like we're really searching for, what's the appropriate level for bellies, and we're really doing that when we know we've just had such strong demand for bacon.
A quiet report week per se. USDA did release and update their WASDE. As we take a look at that on the livestock side of things, anything we're taking note of, any big changes that we've noticed?
Yes, I really focus on 2018, I guess, and say, when you look at the meat complex, if you will, out of USDA, the entire supply and use table for December relative to November was virtually unchanged. So still talking for heavier supplies of all those meats in 2018 relative to 2017. Yet, when you look at what they're doing on the price side of the equation, for example, this month they raised the 2018 annual average price for hogs $2.50. it just reminds me that we're all have been chasing what I think has been stronger demand, and now that it's stayed with us, the idea that it continues into 2018, where USDA is now also focusing as well as we raise prices, yet we really haven't seen any change in the rest of that S&U.
Let's talk a little bit. You mentioned retail prices. Let's start first on the beef side of things. What did the latest report show?
Yeah, when we look at retail beef prices, they were up slightly in November relative to October, up 5 cents. We currently show a choice beef retail price at $5.81. I remind us that's although we went higher in November, that's still 40 cents below where we were in June of this year. So we have seen, yes, a little bit of strength, but nowhere near where we were in the summer months.
But the other proteins, some changes and the other one, and you know, we talk a lot about bacon and my love of bacon, and that looked to decline a little bit for November.
That's right. It was a happy report for you this week, Megan, in that bacon prices did move lower. The retail bacon price was fell 36 cents in November, according to the data that we got released. But still a lofty $5.81 a pound. And when you think about the pork retail price, it was also down 12 cents, but set at $3.79. Again, I want to remind us that overall pork retail price $3.79, yet they're at $5.81. Who would have thought bacon would have run that much above the other pork cuts that we would have? The fact that it used to be pork chops and bacon were roughly the same price, and now at some points bacon is twice that of pork chops, just reminds us of what strong demand can do for a commodity.
And specialized products too. I mean, I think about like all the different flavors of bacon, all of the different types of things and ways to attract consumers to pick up a new product. Because if I see a new flavor of bacon and it's in that spicy range for me, my husband and I are picking it up and cooking with it as much as possible. So I think that that's a great aspect of it too.
Yeah, absolutely. I remind folks all the time that, we used to always talk about these meats as being competing to each other. As pork prices would go up, you might shift to beef, all else equal. But now when you look at bacon in particular, I'm not certain it's a substitute for something like hamburger. I now think it might actually be a complement. We automatically go get that bacon cheeseburger. And so the structure of the retail side in that regard, in terms of what substitutes and what doesn't any longer in that mix, I think is important as we just think about where these markets go over the next few years.
Scott, as we that's really it for reports, and as we take a look at those things, let's talk a little bit a little long-term view and take out the long lens and take a look at where we see things going, specifically as we talk about the FAPRI baseline.
Yeah, so this week, FAPRI, we were in doing the kind of baseline review. So this is our preliminary look at 10 years ahead. We try to bring a number of experts in the room for kind of an off-the-record, if you will, discussion. And it was a lot of interesting things that I thought were brought out as we talked about the livestock review. But I start by just reminding everyone that very similar to USDA's long-term perspective on meat markets, a lot of growth. We're up 15 billion pounds in meat production over the next decade, yet net exports only up about 5 billion pounds. That's very similar in that to USDA, in that we're all suggesting that production is going to grow more quickly than exports can grow, and that means domestic markets are going to be taking more product. Get that is the general trend. We all may miss the magnitude of that trend, but I think everyone's seeming to think that's the direction. For me, the interesting part of the discussion that seemed to unfold in that review was that, number one, we'll expect in the short term meat production to grow even quicker than maybe where we were suggesting here for the next couple of years. So even stronger meat production growth, yet many folks are buying into the idea that demand for meat seems to be stronger and would likely carry in to 2018 and beyond, which, if that's true, I think we're in a situation where we can hold cattle and hog prices better in the next couple of years than I might have thought previously. So that tug of war never seems to end these days between supply and demand, but we're at least in a good combination of strong demand with what's been pretty phenomenal growth in supplies.
We talked about this a little bit last week, and really it's an opportunity for us to bring it up again. We take a look at these trade agreements, and not necessarily just NAFTA, what's going on here with our bordering countries, but with other parts of the world. How important is it that we maintain a level playing field for U.S. producers if we're seeing this massive amount and massive increase in production, and the increase in exports isn't growing at the same pace?
Yeah, so we don't want to back meat up in the domestic market only. I think we've all seen those periods of times where when we can't move it, well, we have to move it at some point, and it's at what price does it move? And we don't want to be in a situation where it has to move at a severely discounted price to make it happen. So those trade agreements do get important, and it's not only the trade agreements we're trying to negotiate, it's also how others negotiate those trade agreements. We've seen the Japanese agreement that might provide a little better access, or I should say more than a little better access for EU pork into Japan. That's competition for us, and we have to watch those kind of bilateral things that are happening without us, as well as our own potential to renegotiate. So it's very critical when you realize that the population growth in the world is going to occur outside the United States, and the rate of income growth is going to occur at a faster rate outside the United States. That's where the demand's going to be for products, and we need to make sure we participate as best we can, and lower tariffs certainly helps us in that regard.
To wrap things up, Scott, as we take a look, final reports of 2017. I cannot believe we're having this conversation. Next Friday, we will see cattle on feed, and we'll see the final quarterly hogs and pigs report. First, let's dig into your thoughts about what we might see in that cattle on feed report, and then we'll finish up talking about quarterly hogs and pigs.
Yeah, so I have a hunch when we see cattle on feed report next week, we'll continue to talk about expansion of inventory of on feed and some still rather large placements trying to occur. It's interesting, however, as I say that, I remind myself all the time that USDA's report now is 1,000 head plus feed yards. I wonder about the amount of cattle being fed in maybe more traditional corn country that reside on less than 1,000 head feed yards that don't get counted. Anecdotally, I sure hear there's a lot of that going on. But it starts to give us a little bit of sense of where we end up mid part of 2018 in terms of beef supplies. And again, I think all indications are we're going to continue to talk about growth there.
And as we talk about, to wrap things up, quarterly hogs and pigs report, thoughts about what we might see and what the USDA might throw at us next week?
I think it's a story of more for sure. I guess as I look at the breeding inventory numbers, I'm not going to be surprised to see us up somewhere around 1%. We'll see where pre-reports come out here early next week, but it sure seems like we're headed for more sows, ultimately more pigs, more market hogs, and more slaughter in 2018. And I remind as part of that, I think, just associated with the growth in processing facilities that are going to be coming on board. They're going to need that shackle space to be as full as possible. So I think all indications to me is that we're going to continue to see some growth. And seems like to me there's pretty strong demand for pigs out there right now, and we have capacity to keep feeding more. All that I think bodes well for expansion in hogs and pigs report that we get next week as well.
Expansion in hogs and pigs, but what does that potentially mean for prices and incomes as we look ahead to 2018?
Yeah, so I guess that's the big question to address at this point. And I guess right now I'll say, yeah, we're going to get that expansion to occur. And it seems to me if demand stays where we've been here of late for both beef and pork, both domestic and international demand, we might call 2018 prices reasonably flat at this point in time. I sure hope that's the case. falters, that's the one that keeps worrying me about where prices could fall as we go through 2018.
Scott, have a great weekend. We will talk to you next Friday.
You do the same, Megan.
Thank you. To have our weekly livestock market update delivered to your email box every Saturday, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.